thank you so much, everyone, for joining us. It's great to have you on this month. Go to my first slide here. Okay, it took a couple of months, but I've mapped out an entire year's worth of industry updates. So here are all the subjects and all the guests that we have coming up between now and December. So save the dates. Almost all of them are on the first Thursday of each month. There's a couple exceptions that we'll mention. But next month, we're going to have Merck Patinas back on. He's a real estate litigator. He was one of our most popular sessions last year. Really interesting update. Marsha Waters, of course, always super popular. Attorney Eric Nesbitt is going to be on in June talking about commercial real estate. He's going to talk about the commercial real estate market and then also talk a little bit about what it means to kind of get into commercial real estate if you're a residential broker. If you're kind of curious about that, that'll be a good one. We're going to do a legislative update with Carr like we do every summer. And Pete Muccio will be back on talking about changes with landlord tenant law. Obviously, lots going on there. So that's going to be an important one.
There's 40 bills that they think will be introduced that have to do with landlord tenant law. It's going to be interesting.
Huge. Yes.
Yeah,
so
huge.
That's going to be a big one. Paul Bondi will be back on talking about E&O coverage, making sure you're protected. Scott Pedersen, always super popular, will be on with Carr talking about just legal updates there. Damian's going to do a contracts update on November 2nd. And then we'll have Terry, our VP of underwriting, on in December talking about all things title. So got a really good lineup for the year. Hopefully you guys will find a lot of that valuable, and we'll look forward to seeing you and invite your friends. The more the merrier. And thanks for your support of our updates. So with that, I'm going to stop my share and I'm going to turn things over to Chris Gaddis and Nicole Pedersen. They're our guest speakers today. I have the privilege of getting to work with these two fabulous professionals here at Heritage Title. And I'm going to let them take a moment to just kind of introduce themselves briefly and kind of give a bit about their background and their roles and what they do. So.
All right.
I'm Nicole. I've been in the industry about 20 years, been here at Heritage for 10. I'm the branch manager of our DTC office on Ulster. I just moved over to this office in October. I was prior at the Highlands Ranch location managing, and I really enjoy being around everybody here, working with Jill and getting to be close to our admin team.
Yeah, and I'm Chris Gaddis. I'm vice president of our Denver Metro operations. So I manage all 8 of our current locations across the metro area. I'm part of our admin executive team, and I help make business decisions and help support our branch managers and our customers when they have special needs to try to figure out a solution to a problem on a file. So very involved in escrow. I've been in the business for a little over 25 years and have kind of always done title. I had a brief stint doing mortgages and then realized that title was my thing instead of mortgages. So we're going to go through some different topics with you all today. And then I think Jill, they'll have the opportunity to ask some questions right at the end if they.
Sure, absolutely.
So I'm going to let Nicole kind of kick things off with a couple of different topics, and then I'll jump in here and there. And I'm going to share my screen a little bit here and there too as we go through some of her presentation.
So the first thing we kind of wanted to kick off is just kind of the start of transactions. So we kind of wanted to just talk about the importance of having everybody's contact information up front. First and foremost, as you guys know, when we first start sending things out, you're going to be getting that title commitment, verification of earnest money being received. And we really want to make sure that everybody's getting everything on the transaction. So it's really important for us to be able to get all that information up front. It's very important to us as a title company and as Heritage. Our tagline is making transactions personal. And obviously we can't personally be involved with you and your clients if we don't have a way to reach out to them. So phone and email address is very important. You know, back in the day, there was a lot more correspondence, I think, between us and you guys as the agents, and then you guys going to your clients. And it's kind of nice not to have you guys be in the middle for a lot of the information that we do need, especially with sellers trying to collect their payment or mortgage payoff information, social security numbers, buyers regarding wire, which we'll touch on later. but us being able to have that direct communication with them is very important. And some of the direct communication that we have is through our secure portal, which Chris is pulling up here. This is our Start in Here portal. So this is a way we'll communicate with both buyers and sellers. It's going to collect all the transaction information, and we do it through a secure portal that has dual authentication. So that's why we do want an email and phone number so that we can use the portal versus a regular email chain, because it is a lot more secure. And the portal is super easy to get into. It's just a click on the blue button. It sends you a text code. They're right in there. They'll ask just yes or no, fill in questions that go fairly quickly. It also allows us to get earnest money from your buyers via mobile deposit. And Chris will show us that in a little bit as well. So just make sure you get us all that information up front, and the sooner we have it, the better. So everybody's in the loop from the start.
Yep.
This is so nice, because kind of back in the day, and anyone who's been in the business for a while remembers like having, PDF sheets and clients printing that out and handwriting the information and then having to figure out scanning that and then a secure way to get that back to the title company. This just makes it so simple and streamlined. It's like that TurboTax experience, just big buttons, easy to click through. It just makes it so simple for us to gather up that information up front and just make it so quick and easy for your customers. So this has been a really nice product.
Jill, can you see my screen where it shows the Start in Here?
Yep.
Okay, perfect. So, I mean, you can see here that it's a simple 3-step just to collect information. This is me as the seller on a transaction. So I can provide like payoff information, if I'm going to need a power of attorney for closing, some very simple questions that are answered by the seller in this instance. But in order for us to facilitate this, and it is through a secure portal. So when we say we are very secure and we don't want to send things via email, we'll talk more about that as throughout this presentation. But this is actually a portal versus an email. So it does require the dual authentication. So similar to what you would use with your bank. And that's why we need a valid email address and a cell phone number, is because it does require that dual authentication to keep the information secure. If you're entering payoff information and social security information and those things into our Start in Here portal, it is a secure portal, but it does require that 2-step authentication for us to be able to use it. So if we don't have a cell phone number, then we have to do the old school route of actually emailing a form and try to figure out how to get that back securely from the seller in a transaction. So this is a much simpler way to communicate. On the buy side, I don't think I'm logged into the buyer side, but this is, I believe, one. So you can see here what it looks like, where it's asking to verify via text message, or you can check a phone call. And as simple as hitting continue, it's sending to my cell phone right now a code. I'm entering that code in. The consumer will click that they agree to the terms of using our platform. So this is the actual example of the mobile deposit. It all kind of integrates the same way, whether it be a mobile deposit collecting seller information, or we send out to the buyer information and ask them a couple of questions about a transaction, including the fact that we'll never email them wiring instructions. And through that, they actually will get our wire fraud alert form. And again, it's through a secure portal, so it's not an email, but it does that wire alert form does include our wire information on it. So it's kind of a nice way just to wrap everything into one in a secure portal for the buyer and the seller.
Since Chris has do you want to go back to the mobile deposit page? We'll just skip to that topic for a moment here. So the best and easiest way for your clients to get us their earnest money, especially if they do have a checkbook. Now, I know nowadays not everybody has checkbooks for their account, or even if they want to go to the bank and get just like a teller check, it doesn't have to be a cashier's check unless you have a short window of time for that closing. This allows us to send that link to them. So as you watched Chris just log in, he's now logged into a mobile deposit link. All they've had to do is put in that code. And then as soon as you hit the take photos, it's going to allow your phone to open up your photo app and take a picture of the front and the back of your check. So the client will actually make the check payable to Heritage Title for their earnest money. And just like they would do an online mobile deposit with their bank, it'll just photo the front and back of the check. It automatically comes to us like immediately, where we'll process the receipt and get the receipt out to all the parties. It's super secure because it's our platform and it's through our secure portal. You do have to be cautious of some other companies that may have mobile deposit options. Some of them use third-party vendors. So the security may not always be the same, but they also may have fees for it as well, where we don't have a fee for ours. It's free and quick and easy for the client to kind of get it handled. We always suggest people keep a hold of that check they've deposited to us for 30 days. Typically, it's not necessarily necessary. I've never had to go back and get one from someone, but it's just a good idea that they keep that on hand, you know, just in case, especially if it's a cashier's check for some reason, if they had to do a cashier's check route. And then for earnest money, obviously, we'll always still take wires. I know some people don't have availability to check for checks at all. And we'll talk about some wire security later on, but obviously we'd have them call us and we can get them that wire information. But anybody that has access to a check, this is great, especially in our fun Colorado snowy days when they got to get earnest money in same day, no reason to run around and drop it off at an office.
Yeah.
And we can send this link to anyone too. So as a buyer's agent, if you're getting everything signed with your client and you're used to dropping my earnest money off for them, get the earnest money from them and have us send you the link. You can mobile deposit it for them. It doesn't have to be them. It's just the person holding that check is going to do the photo of the front and the back. So no reason for you to run to our offices either if you don't have time in your day.
Yeah, we just need to know who is going to be depositing the check. So we have one instance where a builder collects the buyer's earnest money and then they do the mobile deposit for the buyer at their office. So we just need to know who to send the link to, whether it be the real estate agent, a builder, or the buyer. And then we can get that out to them secure. We would need the cell phone number for the person that is going to be receiving the in here link. But like as Nicole said, many other title companies might be using like outside vendors, but I believe they charge, and I believe anywhere from $7 to $15 per transaction. So this is a nice way that we don't charge the consumer for it. It is secure through our portal, and it's real time with our systems and tracks really nicely with our transaction.
Perfect. Back to contact. So I just want to talk a little bit on the best way to get us contact information. So CTM contracts, we don't have access to CTM, so we can't actually log in and see your transaction. So the more that you can send us and give us access to, the better. I know Chris and I talked about in CTM, there's a transaction sheet that can pull in through certain CTM softwares that kind of have the whole transaction of all the parties. If you're using a form like that in CTM, typically as long as both the buyer agent and listing agent have given access to their client's contact information, that'll flow onto that sheet. So as long as when you're sending us the contract, counter, closing instructions, also marking those pages to be able to send to us, that way we'll get that contact information. A lot of times if we have transaction coordinators on the transaction, we're seeing more contact sheets from them, and that'll give us all that information. But even as a buyer's agent, if you put in your buyer's phone and email address, unless you're releasing it onto the contract, it's not going to flow over to us unless we're getting contact sheets. The other document that's good to get to us is some people don't realize, but the special agency agreement is in CTM again, or now. That is going to be the form that we need in order to order CAC documents for your seller. So anytime you have an HOA, even if you think we're probably not going to do the CAC docs, but just in case you need us at the last minute to do those, I would have those special agency agreements filled out anytime you're dealing with the seller with an HOA. And again, remember to mark that and send that in with the contract. It'll allow us to get your CAC docs ordered a lot quicker and make sure we're not missing any deadlines. Because sometimes sellers, you know, they're busy and in the midst of stuff. And now after we've received the contract, we're sending out an additional form for them to fill out right away, and usually asking them to get it done quickly because of deadlines. So if you get that done through CTM and send it with your contract, that will save some time.
Absolutely.
Next topic, we're going to talk about some mobile notaries. So kind of just pros and cons to mobile notaries. So throughout the years, and especially obviously during COVID, when we had more people being cautious about coming into offices, not trying to do the drive up in the parking lot closings and stuff like that, we had a lot more people started to do mobile notaries, having the notaries go to them. And although it can be, you know, a huge convenience for your client, we kind of look at it, this is, you know, the biggest transaction usually for a buyer and a seller in their financial life. And we really want to make sure everything's taken care of well for the transaction. So again, we want to be personal and make sure that we're, you know, being there as the escrow officer in person to be able to take care of your clients and be able to answer all of those questions. Our escrow officers, you know, they have a lot of knowledge. So when your buyers and sellers are at the table and they're already nervous and it's a big transaction in their life, they want to be sitting with somebody that any question they have is going to be able to be answered. Or if there's any issues that come up at the time of closing, they can be resolved at that time. When the closing is out of the office, that can pose a challenge if we have something that's maybe missing, we didn't have an amend, or there's credits that are different, or there's any changes that need to be made, there's maybe a misspelling of someone's name. That can cause a challenge because we're not there and have the ability to make those changes right there at the closing table and make sure everybody's walking away that day knowing everything's done correctly.
Hey, Nicole, can I interrupt real quick? I just had a real quick
Yeah.
question since Chris left up this page of the Earnest money. I was curious, with this system, how does an Earnest money release work?
Well, I mean, it's the
Release or
I'm
receipt?
sorry, a receipt, not a release, a receipt.
a receipt. So it still manually has to be reviewed on our end. So we, on the admin side, we have someone who watches our mobile deposit queue that then makes sure that the checks are valid, that they are signed properly and completed properly, that it's a decent image that we can actually deposit with our bank. And then once that happens, then we import that into our system and it kind of populates most of the receipt for us based on that mobile deposit.
Oh, great. Well, that's good to know. I was curious how that would work with the automated system like this. That's great.
Yeah, it's very automated. However, it does still take a human to look at it and make sure, one, that checks are completed, they're signed. We've had some where they take a picture and they forgot to sign the check. So at that point, we could reject it back to them, give them a phone call again. We have their contact information and let them know what was missing from the check and have them do it again. But we've been doing this now for, I guess, maybe about 1.5 years or so. And it works really well, especially for someone who doesn't want to get out and get to one of our offices. It's very convenient.
Oh, thanks.
Of course.
And the one difference to keep in mind for the buyers too, when they are doing the deposit, people kind of think of, you know, when we tell them it's like your bank depositing it, when they're depositing it into their bank, obviously they're typically endorsing the back of their check. They just have to remember they're actually depositing it to our bank account. So there should not be any endorsements on the back of the check.
Yeah.
Because we've had that happen as well.
And that gives them the hassle-free instructions here. It's a 4-step, very easy process of, you know, kind of walking them through it. So, and it works with Apple and Android products. Yeah.
Thanks, guys.
Of course.
Anything else you want to mention on
Um,
notaries?
Did you mention this one?
Yeah, the last thing for the notaries too is, besides making corrections, but our closers are also very well trained and knowledgeable in kind of recognizing or catching anything that could cause any post-closing issues as well. So again, making sure we have the right parties involved, making sure the right documents. I mean, there's human error in this world too, or maybe there's a document that doesn't get printed on the printer correctly. And your regular closer that does this day to day, they're going to be going through the documents at closing, and they'll know if something's missing or if something needs to be added in because of a certain conversation or certain detail to that closing.
Yeah, I mean, we never want to discourage the use of convenience of someone signing off-site. We know it happens, especially if we have a buyer or seller that live out of state. If they're local, though, it just makes the transaction so much smoother. I believe that you're the closer or escrow officer, or even just one of our other employees that maybe they weren't the closer that worked on the file, but they're so familiar with our documents and the lender's documents. It just is a different experience, I believe, for the customer. And we do catch things, if there's anything going on that looks a little bit fraudulent or whatever. Most of our escrow officers have been doing this for quite some time. We have a very seasoned escrow staff that they see things and they question things if something doesn't look correct, and then they can alert either the lender or the agents or whoever it may be that they need to notify. So it's kind of going back. We heard a lot of our agents talk about going old school, getting back to the basics, and we love that. We love being in front of the customers and being able to help answer their questions and being part of their transaction.
You mean they're going to do the 3 carbon paper contracts again and press hard 3 copies? Is that how old school, or just not quite that bad?
Not quite that
Not
bad.
quite that old
Okay.
school. Yeah, some of our closers might not have been part of that. So,
Damian, you just aged yourself.
I know.
Like, that was before me even.
I mean, I'll say when
yeah.
I first started working this business, I worked more on the title side, and I typed policy endorsements, and they were carbon, I think 3 or 4 pages, white, yellow, pink, with black carbon in between. And we would take the carbon and use that to raise the embossed seal on documents that were notarized. So, dual
You don't
function.
miss those days, do you?
Not at all. Not at all. So the next thing I want to kind of talk about that's on the agenda is wire fraud. And I think everyone on the call knows and hears a lot about wire fraud. I think we hear a lot of times when it happens, everyone says, I didn't think it would happen to me. And it does. It can happen to anyone. It can happen to us. I want to share some stats here in just a second too, but we do a lot of looking at our processes at Heritage and trying to figure out the best ways to mitigate wire fraud. The fraudsters are always trying to be one step ahead of us. Years ago, when it started, they were really just targeting sellers' funds. And someone would call us post-closing and say, I changed my bank account, or I prefer my wire to go to this account instead. Now it's really anything and everything. We're seeing wire fraud attempts for buyers' funds where they've impersonated us or the agent or the lender, including taking settlement statements that look legitimate, and just tweaking them enough, and they'll leave certain things that don't draw too much attention. And they've gotten pretty good at grammar and things that they weren't great at in the beginning. We are seeing them also target real estate commission wires and CDAs. The big one for us is we're seeing just recently about 50% increase in fraudsters trying to divert payoff wires. So that's a huge one for us. When we're dealing with large institutional banks, we keep a very good database of their wiring instructions. It's pretty rare that a payoff lender is going to change their bank information. So we're able to keep verification notes on who we spoke with, date, time, phone numbers. But we have seen more and more of these attempts where they send the actual payoff. They remove maybe a couple things like a phone number from it. So, if you did want to call, then the number's missing. So just really weird little tweaks, but that's a huge trend right now that we're seeing more and more of, where a payoff lender is trying to, or someone's trying to fraudulently have us wire a payoff to them. So, that's a big one to watch for. Just some stats.
Real quick before you get into that, I've seen them actually where they've actually spoofed the broker's their phone number and call the title company. So it's not just, worrying about email. That's bad enough, but you also have to warn your clients that, or, the title company needs to be on their toes about the fact that you might get a phone call from one of these fraudsters that's spoofing the broker's phone number or the seller's phone number. Brokers are easier because they can find their phone numbers, but I've seen that one too.
Yeah, I mean, it's really, they've gotten much better at impersonating someone in the transaction and knowing enough about the transaction that it's, becomes believable that you're talking to the correct person. I would say that, looking at our stats between buyer and sellers funds being targeted, it's kind of evened out a little bit. You see some months where we see trends of them targeting more buyers and then others where it's more sellers. Definitely the trends go up when we're busier. So when you look at like we're kind of heading into a little bit busier season in March, and then obviously summer months, I believe the assumption would be as everyone is much busier. Obviously we have more transactions and people are paying less attention to what's going on, but we're Heritage is part of and owned by Fidelity National Financial, and we track wire stats on wire fraud attempts, actual diverted funds, and actually what we can recover as well. And just to share with you for 2022 some numbers here. So the amount of seller or cash out refi, so that'd be like a borrower's funds that were diverted, $28,654,000 just from the Fidelity companies. Borrower funds, that's when the buyer's sending us money. That number of attempted diversions, 13,802,000, and total diverted that actually went through $45 million. A little bit of the impressive amount is we were able to recover over 25 million of the diverted funds. So, kind of a message there would be is because we're a larger company, part of a larger network of companies, we have the FBI's number in our pocket. So we have a whole team in our wire fraud department that when we see or we hear that there was an attempt or that maybe the diversion, maybe the person did wire to a fraudulent account, the sooner we know, this is all about timing, the sooner we know, the sooner we can jump on it and request that a hold be placed on that account that we wired to, or the account shut down and involve the FBI. And that's typically where we see the diverted amounts coming back to us that we can recover is the timing. So if it sits there for many days, then the chances of getting the money back are probably less because the money is going to be moving in and out of that account probably pretty quick. So the sooner we know, if you hear from your customer that they think they may have wired somewhere wrong, check with us. We'll see if we have the wire, if we know the amount, we can look right away. If we don't have it, then we can alert our fraud department of what the amount is, the account information that we believe it went to. But it is still a huge thing, and that's why we really need like the contact information for the customers we're working with, because we have conversations with them. We never, ever email wiring instructions to a consumer. We need to be talking to them, asking them questions about the transaction to kind of vet them as the correct person, and make sure that we're protecting their funds. I mean, it's a lot of money that we see attempts on, and we've seen some really interesting emails too of, your closer passed away, and so now I'm taking over this transaction, and here's where I want you to wire instead. I mean, just really some crazy stuff that we've seen over the years. But we need to really make sure that we're verifying as an employee. So even if we send our closing out to a mobile notary or another party to sign, we at Heritage will always need to verbally verify with that consumer their instructions. We don't rely on anyone else to do that. We have specific guidelines in place. We have a whole department that actually focuses on wire approvals and making sure that we have vetted all the information on our end. So another reason to have all that contact information. So, if your customers, we've seen also some customers that are reluctant or concerned about sending a wire to us, we're happy to talk them through that. We do prefer and require, there are some exceptions, a wire for cash transactions. And the reason that is a little bit, when there's a loan involved, we can kind of vet where the funds are coming from based on a loan application or with that lender. And we assume that the lenders are also vetting of where their funds are coming from for closing, that they have the funds and those sorts of things. So if you do have a customer that's concerned about a wire, then, just have them call and talk to their escrow officer. We'll call them too, if you want to instruct us, if we have their contact information. And we prefer actually to call them because, when they're calling us, we don't know if we're giving the information to the right party or not. So we want to actually call them and have that information instead. Next I want to talk about wiring and timing of a wire. So we're running into more and more obstacles with this as time goes on as well. So there's a lot of online banks these days. I can't even name any of them because I've banked at the same place for quite some time, but we're finding more and more restrictions that some of these banks have, especially the online ones or the ones that are not local and have a presence in Colorado, where either they require the consumer to be standing in front of one of their employees to initiate that wire, or they won't send the funds, or they have restrictions on how much based on that account type that the consumer can wire per day. So if someone owes $100,000 for closing and their bank only allows them to wire $5,000 a day max, they got a problem because they're probably finding that out the day or two before closing. Same thing goes with standing in front of a bank teller to initiate that wire. We've actually had people who have had to fly back to another state to initiate their wire and then fly back for the closing because their banks have different rules. So, with this, I say, be cautious of when a title company says send your money like 2 weeks in advance of closing, because we've seen that with some fraud. However, it's not a bad idea to have the consumer reach out to their bank with plenty of time. I'd say at least 3 to 5 business days before they're closing, and ask their bank, what is your procedure for wiring out funds for a real estate transaction? If they say you have to be in front of us, if they say they have a daily limit on how much can be wired, it's way better to know that versus the day before or the day of closing. And we've seen some people who show up to closing and want to initiate their wire at closing at 4:00 on a Friday afternoon. That they just don't understand the timing of how the Federal Reserve works, and that it's too late, then we're not getting that wire until the next business day or later. Also, if the funds are coming from an investment type account, Charles Schwab or some Morgan Stanley, something like that, and they're selling stock, that doesn't happen very quickly either. So we've seen that happen as well, and they start that initiation process too late, and then they can't get their funds to closing in time. So I just think it's a good idea to educate consumers of checking a week prior to closing of what that process looks like with their bank, and finding out what the timing looks like, how much they can wire, etc. Some banks may be able to even set it up for a specific date in advance for them versus waiting till the day of or day before closing. So those are some things we've seen most recently. Also, if you're closing later in the day, because of our wire out process and how we have like a 3-level process of how it gets approved and vetting those wiring instructions, closings that happen later in the day most likely may not see those funds in their account until the following business day. We send out a lot of money, especially on busy days into the month. Fridays typically are really busy days for closings. And we don't want to rush and miss something on wire instructions that may be fraudulent or that there's a problem with the wire. So we are very cautious, probably overly cautious in some instances. But we want to get the money to the consumer safely and not have to figure out, if we put in the account number incorrectly or if it's missing digits, letting it bounce back, etc. The other thing we see a lot of is around holidays. If you're closing around 4th of July or you're closing around a holiday that falls on a Monday, to be aware of that. If you schedule a late closing on a Friday, they're probably not going to see those funds until Tuesday. So just be prepared for how you schedule around holiday Fridays before holidays, especially. We see people get a little bit upset with us, and it's like, we're relying on the Federal Reserve, we're relying on their bank to post the wire on their receiving end. Once those funds leave our account, we have no control over the speed of the bank posting it. Credit unions, if a consumer banks with a credit union, it can take a little bit longer sometimes if it's going through a routing credit union versus going directly into that account. So I think that's really it, unless Nicole, you wanted to add something to that.
For wires for sellers too, always have that upfront conversation with your sellers. If they do own the property in an entity, a business or a trust, or if you're dealing with an estate, we have to send the money to the vested owner. So if you have the Smith Trust, Family Trust, and your sellers hands down will tell you that it's okay, they have their own bank accounts and they're the trustees of the bank. We have that happen quite often where we'll send the money out, assuming that it's a trust because they're entitled to the trust, and then their bank rejects it because that name does not match. And, people kind of get upset with that, but once you explain to them, the important thing is, it's their money we're protecting, and they have set up a family trust to protect their beneficiaries. And for us as a title company to say, oh, no big deal, even though you own this as in a trust, we're just going to give you as an individual that money. We have disregarded their family planning. And that's something that, we legally can't do because there could be somebody else involved in that trust that may not like how that was handled. So do make sure your sellers have accounts that match up with how they own their property. Also a little more ahead than the day of when they're scrambling to get a new account open.
And yeah, Damian, maybe you could speak to that a little bit, because isn't the whole purpose of setting up a trust is so that we follow the trust and where the funds are going and how they hold title?
Yeah, the trusts are actually set up to try and avoid probate. That's the biggest thing is in California and Florida, they set them up to see if they can avoid probate, because in California and Florida, the probate attorneys charge a percentage of the estate. So that's the point of it. But there's estate planning purposes as to why you would do it, and the trustee needs to keep those monies separate for all sorts of different reasons to make sure that it's not income and that it's not commingling and all these kind of things. So you're actually doing them a favor by making sure it shows up in the trust account instead of having some beneficiary said that somehow they mismanaged the funds.
Yeah, and same thing goes for the LLCs. A lot of people will create like a single member LLC with the property address for that specific transaction. We would have to disperse then to that LLC as well. We're relying typically on a statement of authority on who's signing on behalf of that entity. And per statute, we're allowed to do that. But we also get, we don't know, are there multiple members of the LLC? We aren't always vetting or reviewing an entire operating agreement, and nor do we know if we have the most current or only version of that. So our rule is we always disperse to the vested owner, but it does become a problem on occasion where someone doesn't have a bank account set up in that name. In that case, if wire transfer, obviously we can't send at that very moment, we can issue a check to that entity and they can take it to the bank and open an account to deposit that check.
Yeah, I see that too. And what's funny is if you don't have a bank account for that entity, that means that you probably didn't have the separation to have the protection that you were looking for to begin with. So you might have that conversation with your clients about, if you're doing an LLC, talk to the accountant, because that's all, that's not title company driven. That's going to be accountant driven as far as why they set it up and how they did it to make sure that they do their taxes correctly. And that could cause them even more problems if they take it personally.
Yeah, I agree. I'm going to stop sharing my screen now.
We could talk some more about earnest money deposits, Chris. You're really, really proud of that. I know.
I am proud of it. You know what? I don't have a bank that's local. So doing the mobile deposits, I've been doing that for years. And the fact that we have this, that, for a consumer, we know everyone's busy out there. So, if you're headed to our downtown office, you want to fight with parking, this is a way better option.
Yeah, it makes sense. It does make sense.
There was a question that just popped through. Are you only referring to trusts and LLCs? What if the vested owner is a divorced couple? I think that would be a good item to address. Thanks for that question.
Yeah, so, and it's not even just divorces. Nowadays, I can't tell you the amount of people that own properties together that we do closings for that don't have joint accounts. Even if they are married and staying married after closing, they have separate funds and have never had joint accounts. So That's going to go back to the vested owners are allowed to direct us to pay those funds however they see fit between the two of them. So again, we can't pay money to someone that's not a vested owner, but we can certainly pay whatever percentage of the proceeds to the husband and wife or mother, daughter. We see a lot of parents that have co-signed on homes as well for children. And in those cases, a lot of times we end up giving all the proceeds to the child because say it was really their home, but the parents were just co-signers. And in that case, the parents would agree to no proceeds and all the funds going to the kids. So we would take mutual agreement on how to split those funds so they could go to separate accounts.
Yeah.
We'll get wires rejected like that as well. We'll send out a wire to Mr. and Mrs. not getting divorced, and then it kicks back because one of them is not on that account.
The biggest thing though, being that whoever gets the money has to be an owner. You can't just say mutual agreement doesn't do it to give it to some third party that's not involved. It has to be at least one person that's an owner.
That's correct. Yeah, we only disperse to the vested owners. So if it's Joe and Jane Smith, then they can just dictate to us how we will disperse to those two people. But if it's Joe Smith and Jane was never entitled, then we are not making a disbursement to Jane through our transaction. We're not tax reporting. We're not doing anything that we would have to do to report that. So the other thing I want to remind people of is, with divorces and divorce decrees, we as a title company are not a party to that divorce decree.
You're not?
We're not, thank goodness. So we would rely on them to tell us, this person gets X amount and the other person gets this amount, again, if they're both entitled. If they're not both entitled, then we're only paying the person that's the person entitled. But we get that a lot, like, wanting them to calculate, the husband's been paying the electric bill for 6 months and the wife's been paying some car payments, and do the calculations. We don't do that, so we have no way to track that information of who paid what. And make sure it's consistent. So we will rely on the parties to tell us how to split those proceeds.
And the one exception to not paying somebody in title is going to be a divorce where they cannot agree. If the parties cannot agree, our one exception is we can wire those funds to one of their divorce attorneys. It would go into a trust account as them being the beneficiaries for them to disperse once that is agreed upon. And same thing with if you have a seller that's obviously going to close on another home at another title company, we can send their funds again because they're the beneficiary of those funds still.
Yeah, I figured you were going to say with the divorce one, Nicole, that they had to send them to the court, which oy vey, but that's good that you can send it to the attorneys.
Yeah, as long as they agree, we can send it to you, Damian, and you can handle it for them.
I don't want to touch it. I don't do divorce.
And just a reminder too, I thought of this as we're talking, we're getting a lot of 1099 calls this time of year. I think consumers really forget what we report. We report the sales price or the percentage of the sales price. We do not report proceeds. We get those calls over and over again this time of year, that you reported wrong. You reported that, my sales price now only got $100,000. My sales price was $500,000. We report sales price per the IRS. So I just thought of that while we're talking about.
Yeah, and that's all based on basis, because what you can take is all based on what you paid for it originally, guys. And that's an accounting question, but there's reasons they have to do that.
Yeah. All right. Any other questions?
Is that all we had topic wise?
I think that's all we have.
That was a lot. They just kind of packed it all in one little section.
Yeah. Any burning escrow questions out there, you guys? This is a very knowledgeable team. We're happy to answer anything at all. So.
Another comment I'll make about the wire too, like Chris said, we won't send emails or texts or that type of thing. I always look at it as you want to make sure you know who's contacting you with the information. So if you have a buyer that's going to wire to us, they should call us because you have the trusted number for us. They will know they're calling Heritage Title and that's who they're getting the information from. Same thing with your seller. The seller is going to sign with somebody, whether it's in our office or a mobile notary. So the seller will provide that information. If it's not in our office, then we will obviously call them with the number that we know that is them, that we receive at the beginning of the transaction, to verify that information. We do have some agents that have their sellers call us ahead of time. So if you kind of think of that, like if you tell your seller, call the title company, get them your wire instructions up front. I always take that information, but I always tell the seller, you've got to have it again at your signing, because we have to verify that in person, or we have to be the one calling them. When they call us, we don't have any way to verify that it's them. So that's not really a good way for us to take that information. And I know you're trying to be proactive to make sure that we have the info, but it's not the safest way to handle it.
Yeah, the other point is don't let them call off the number they got on the email, for the love of God. Tell them that you be the provider of the number. Don't tell them to call the title company, because I've seen where brokers have told them to call the title company, and then they get this email in and they call the title company, and guess who's on the other end? It's not Heritage Title, it's some scoundrel trying to steal the money. So yeah, the trusted source is so important, as Nicole said.
We've seen that even with even spoof, not our company, but we've seen spoofed web pages on the internet where someone's created a web page that looks very similar to a title company's website. And I mean, they go to all lengths to try to take money, because it's a lot of money typically that's being transferred back and forth.
We had a couple questions come in. One quick question: do you send commission data to the IRS for each agent?
We do not. We do not report commissions to the IRS.
That is handled by the brokerage firm.
Okay, Jen, I'm gonna come back to your question. Can you tell me what your position is on earnest money release according to paragraph 23 in the contract to buy and sell regarding an earnest money dispute? Is this a case-by-case basis? Great question.
Yeah, I can answer that one, because I deal with these a lot when they come across my desk. So, keep in mind, we as a title company are not a party to the contract. So we follow the Colorado Division of Insurance Regulation 814. That regulation allows us to make a decision on how we handle these. I will say that 99% of the time we take the stance of we want a mutually signed, agreed upon release. And 814 protects us and allows us to make that decision on especially when we know there's a dispute for earnest money. So we don't want to get pulled into the middle of what that dispute looks like. We don't know if per the contract that they, who's right and who's wrong. So we might have an opinion of it. We're not going to tell you what our opinion is. We're going to be the neutral third party that we are, and rely on Regulation 814. And that's cited in the closing instructions versus the contract. So the closing instructions are what tie us to that contract, but the closing instructions will reference earnest money release or disputes, and will reference the Division of Insurance 814 regulation. Damian, you want to add to that?
Yeah, I just want to add what the contract says. And you guys, I think, get dragged in the contract too sometimes with that earnest money receipt. But 814 is very similar to what the contract says. In fact, the reason the contract has the stuff in there is because of the people that are not subject to 814, that might be escrow people that are not doing title. And there's not a whole bunch of them, but there are some. The choices are do nothing, which is what title company is what Chris is saying they typically do. And then the last resort is, okay, nothing's happened on this. It's been a month. We got to do something with this money. And so the title company now has the right under the contract that they can send out a notice that says, hey guys, we haven't heard anything. And so if we don't get a summons and complaint, we're going to give it back to the buyer. And the whole purpose of that is because of the Great Colorado Payback. I had one of these situations where it was a lease option, if you can believe that, and they held the money for 25 years because the buyer demanded it, the seller demanded it, and the title company, or it was the brokerage firm, wasn't even the title company. They held it, and they held it, and they held it, and so finally, we're like, okay, well, let's just give this back to Colorado Payback because it's just cheated funds at this point. And the state says, well, yeah, but who gets it? And I'm like, well, I don't know, because the buyer and seller both claimed it. And they're like, well, we can't take it unless we have somebody to give it to. So that's why there's that 120-day notice in there. So the title company, if they can't get a hold of anybody, they have a way of getting it off their books. And, they'll send that out, but it's not a weapon because they don't have to send it out. And if they feel like the parties really need to work this out, they're going to just sit and wait and let the guys, let everybody figure it out. So I hear a lot of people being like, oh, the title company needs to send this letter right now. And, oh, it's been 120 days since closing, so we need our money. It only starts the 120 days after they send the notice, and the title company doesn't have any obligation to send that until they feel like there's less risk. And so make sure your clients understand how that rule works. Sorry, Chris, if you have.
No, that's fine. And we hear both sides of that. We hear from some of our customers that don't want us to send the letter and some that do. And we may evaluate that, like you said, and do nothing. We had one recently that was a dispute, and it was $100,000 in earnest money. So in that case, I believe we had sent the letter, but even when it came down to it, we were still getting notified by both parties that it was still being disputed. And in that case, we weren't willing to risk and us get drug into it even deeper. So we chose to do nothing since we were still being communicated to because of the amount of the liability.
Yeah, the whole purpose of the 120 days is that it's cheated funds of making sure there's a mechanism to get them off your books when everybody doesn't care anymore. And that's the only reason it was actually added to the contract. Yeah,
I will say that it's in everyone's best interest, in my opinion, that they figure it out, because otherwise the money's just sitting in an escrow account, not earning any interest, not doing anything. And that, I believe we still have the option to still even interplead, especially for escrow funds.
You do, yeah.
So that's a costly option that is going to eat up whatever money that is being held.
Yeah, and usually the 100,000 you might end up interpleading if you have this fight going on and you're like, okay, we can't deal with this anymore. We're going to put it in because you guys are going to have to fight it out, but you're not going to do it for the $2,500.
Right. Yeah. It costs more.
Yeah.
We had a question regarding beneficiary deeds. I think that's a great subject to talk about because we are seeing more and more of them. Do you guys want to kind of touch on those, how they work? And there was a specific question, are there any exceptions to the 4-month rule, which we'll talk about? And then assuming that the proceeds will just go to both people. Once they are able to sell the property, the proceeds would just go to both people if there's 2 people listed on the beneficiary's deed.
Yeah, however many people are on the deed that are now owners, we would disperse to them again, just like we talked about earlier. If they need that split out in whatever way they agree, we'll take those instructions. But again, it would go to the vested owner. And that 4-month rule is pretty strong.
Yeah, I would say we looked at some ways of kind of getting around that a little bit, whether it be, getting information of whether or not any debts were owed. I mean, that 4-month period is really for that allowance of, any debts that are owed from the person. I can't remember the exact scenario, but I sit right next door to Terry Williams, which he's been on your industry update calls, and he's our state underwriter. And he used to allow a little more gray area. I think if we're really, really close and we can get a cert date, we might allow you to close an escrow and hold the proceeds until we can get a cert date through that 4-month period. Or if we're really super close to it, we've, allowed a few things. But I believe there was a scenario where, and it wasn't us, but another title company that we were aware of that had kind of been burned on that a bit. And it was really close to the end of the 4-month period. They made an exception, and I believe it was costly to them for making that exception.
Yeah, the whole purpose of the beneficiary deed is to try and avoid probate. But, probate has this mechanism that when you file probate, you have to give notice to creditors, and they have an opportunity to come in and say, hey, this person owed me money. And when they make those claims, then the estate would pay out through the court system. And a beneficiary's deed doesn't have that. That's why they have this 4-month period where it has to wait, so that anybody that has a claim can make it within that time. And so there's just really nothing the title companies can do about it because of what the statute says. It's just you're stuck with waiting until the period passes for those creditors to make any claims against the estate. And it's probably Medicaid that got them, if I was betting.
I think it was.
Any other questions out there? Okay, we'll stick around for maybe a minute or two if you guys don't mind, but let's see, one kind of popped in there. Oh, thank you. Thanks, Jeff. Okay, well, we'll kind of wrap up, but are you guys okay to stay on for a couple minutes in case people do have a couple more questions? Okay, perfect. Well, thanks for joining. We hope you got a lot out of today, and we'll look forward to seeing you on future updates. Thank you, Chris and Nicole and Damian, as always, for your time. And please reach out to us anytime. Call, text, email your sales executive with Heritage. We are happy to put you in touch with these amazing experts and help with any questions that you have. So reach out anytime.